Alibaba have just reported earnings and the stock is down more than 8%. This is a huge reaction, and of course, investors are not loving this latest earnings report from Alibaba. So, I've just read the reports. There are good things, less good things, and some bad things that are responsible for this reaction. And in this video, I will show you the key highlights of this latest earnings report and why the investors are reacting like this way. And I will give you my honest opinion about Alibaba and this latest September quarter report. So let's find out. First, I want to tell you there are 4 highlights that I want to show you in this video. So first, let's start with the bad things. Look into the news. Alibaba is down 8% because it disappoints on profits and curbs cloud spin-offs. Their net income was down when compared to expectations. Not much, but a little bit. Investors were expecting more profits from this company. And why that happened? The CEO just said they are increasing their investments. They are investing a lot. Have I already reported their cloud segment are having a huge investment. They are investing in a lot of new models, AI, and they are gaining market share. So I do believe this investment it's really good. As a Alibaba shareholder, I want them to invest in business. They have a good future ahead, as like Alibaba Cloud, and that's why their profits are down. So this is bad news, but for me, I'm not. I wouldn't mind them to invest. So they are investing for the greater good, and I do believe that we will have results ahead in the next earnings report. So even though Alibaba Cloud is being a huge miss in the latest report and in this one, I do believe in the future we'll see greater results from this segment, and I hope we believe this will turn one of the key jewels in this company. Second, revenue was good. They grow above expectations. They said it grew around 9%. We'll see in the earnings reports next, but for me it's the most important thing. They said the business is good. They are still growing above expectations. So I'm really happy, even though this has been a really difficult year. And for a company growing around 9% revenue in a difficult year, for me it's a really good thing. It's growing at this pace. If the economy starts to accelerating as expected, as it is expected, this will be really good for Alibaba. In difficult times, growing 9%, for me it's really good. So the second thing is the curve on Alibaba Cloud spin-off. They said, we believe that a full spin-off of Cloud Intelligence Group may not achieve the intended effect of shareholder value enhancement. So they were doing this spin-off to add shareholder value, and they are not doing that because they do not believe in that. And they said that because they are having difficulties because of the US chips export. It's getting harder for Chinese companies to get the chips, and when you have a cloud business, it's important to get NVIDIA chips, for example, and it can be a problem in the future. US and China are working on that, but I believe they will have difficulties to get these most advanced chips. So they are afraid of that, and that's why, in my opinion, the shareholders are overreacting to this report, because the CEO of Cloud Group said that they are having that difficulties, and since cloud is a very important business, they are afraid of this for Alibaba. But it will not have a lot of influence on the Alibaba Group. Cloud is still a small segment of their business, but I'm really bullish on this. They are investing a lot on cloud. They have the best AI models and large language models. technological companies in China are using Alibaba Cloud for that. They have a lot of market share, and they are, in my opinion, of the we have seen in the latest reports and news, they probably are gaining market share. So this is really good and can be really good in the future. So uh, I'm worried about that. It's the only thing that are worrying me in this report. For example, when we look into the words of the CEO in this latest report, they say Alibaba Group delivered a solid quarter, marked by renewed momentum and energy across multiple businesses as a result of our strategic reorganization. As we embark on a new phase of development, we have clearly defined our strategic focus and priorities. We will maintain an entrepreneurial mindset. We are committed to investing for growth and making bold decisions where necessary. Through a more flexible organizational governance mechanism, we aim to capture brand new opportunities from the ongoing AI technological transformation and create more value for our customers. I really love what Ed Yu, the new CEO of Alibaba, said. They are investing. I want a company like Alibaba investing, and where they are seeing the best opportunity for the future. It's on AI, on their cloud business. So they are investing a lot, and that's why their profits are. They are not down. They were still good, but they were not as good as expected because they are investing more of their capital to uh, to increase the revenues in the future and the profits in the future. So, as an investor, I'm really happy to see that, and I do believe AI will change the world and China, and they are investing on that, and I do believe they will be really good for the future, and you will see the it will not we will not see that in the next earnings report. It will make time, but they are invest for the future, and I'm hoping to hold this company for the next few years. So I'm really happy that we are seeing an investment of Alibaba in this business. So this is good news. Revenue and business is a barometer for the business in general, and they are still growing, which is really good. Profits were not as good as expected because they are investing more in good opportunities, and they are being, as they said, having an entrepreneurial mindset. They want to make bold decisions, and this is really good. This will be good for the shareholders. So we achieve a stable quarterly revenue increase in 9%. That's good in a bad year, growing 9% in a company as big as Alibaba. I will take that. Really good news. Their EBITDA increased 34% and 18% year over year. Their profits were grow, but net profits take a small hit when compared to expectation. But this is a company so undervalued that it doesn't make sense to go down in this. And I do believe Alibaba shares are not down because of this, because the results were great. Under our capital management plan, we are prioritizing investment in technology and innovation for our business to drive new growth. Love it. We are confident in our business fundamentals, and we are pleased to announce our first annual dividend distribution for fiscal year 2023 with an aggregate amount of approximately 2.5 billion. This is maybe 1%. This is a small dividend as part of our continued effort to enhance shareholders. This is the fourth highlight. A new dividend they will do in the year end, and they are one thing I love more than the dividend is return in addition to the ongoing share repurchase program. I love that. A company as undervalued as Alibaba, they have to be doing more buybacks. That's my opinion. I would prefer a bigger buyback program than a dividend because it's more efficient for investors to have them to have their free cash flow invested in buybacks because they have to not to pay taxes on this. Look, paying a dividend. If you receive a dividend, we have to pay taxes. So 30% of that value will go to the government. So for the shareholders, if you are long term, you prefer to have them doing buybacks. Of course, it has to be on an undervalued company because you want to pay a good price for the shares they are repurchasing because you are investing your free cash flow and you want them to buy cheap shares. So at this point on Alibaba, I would love to see them buying a lot of shares. So they have a really huge buyback program. I don't remember, but it was like 25-30 billion dollars, which is like more than 10% of the company if you look into the market cap right now. The highlights, four highlights of this report to end this video. Revenue was up 9%. It was above expectation. In my opinion, really good for this company. Net income, it grew 90% year over year, but expectations were higher, so it is a miss. But in my opinion, it is a miss because of good news, because they are taking a small hit at the moment, because they are investing a lot in new technologies, AI for the future, and these profits are reinvested in good opportunities, and it will be good for the Alibaba company in the future. They are taking these profits to invest in their future, and I do really believe it is good news for me. Third thing is they are not doing the spin-off of cloud segment anymore because they are worried about the segment. Not doing the spin-off, it's not important in my opinion. They still have the company. The company will, the cloud segment will do good. I'm not worried about that. But the part they say they are having difficulties to get the US chips, the Nvidia chips, the most advanced chips, it might take a hit on their business. But they will still compete with other Chinese companies for the cloud market share on China. So the other companies won't get either. But it will not be good news for them, and showing that they are worried, it's worrying the investor, and that's the main reason the stock is down 8% pre-market at the moment. The fourth thing is they issue a dividend for the end of the year. There are a lot of investors that are seeing that as good news. I don't believe it is good news or bad news, but the only thing I really like, because they are returning capital. They were only returning capital doing their buyback program, but now they have the dividend as well. So they are returning their free cash flow to the shareholders. This could be good because there are a lot of investors that are afraid to invest in Chinese companies. But if they are returning capital, this might change the sentiment. They said they issue a new dividend, and they continue their buyback program, so that are good news. So in my opinion, I do believe this is an overreaction, going down 8%. I do believe this worry in getting US ships, but this is not news. It's not new that we have that they will have difficulty to get level. For me, it's overreaction, and this earnings report doesn't change what I believe in Alibaba or my price target, for example. Alibaba is still a great company. They will continue to grow, having more profits in the future, and as it shouldn't, an earnings report doesn't change your thesis on the company. I still believe in that. I take some good news, but they just worry the investors into getting the ship for the cloud segment. But this is what it is. They continue to grow. Cloud was a miss again, but in general, their business is doing great, and I'm still bullish on this company. But you shouldn't buy Alibaba just because I own it or any other investor own. You have to do your due diligence, and if you want to buy it or if you believe in this company, you have to buy it. So in my opinion, this is an okay report. Good news, bad news, but it is what it is. We'll see how it will work in the future, and I'm really bullish on this company. I hope you find this information, these highlights, important for your research. I hope you like the information, and if you like it, please like and subscribe, guys. Bye.